Then in part D, you need to discuss the errors as well as how the errors should be corrected in the accountant's calculation of the minimum price per kilogram for the special order of hazelnut flavored cappuccino. All right, so you don't have to calculate the minimum price per kilogram for the special order. The calculation has been done and you need to comment on the calculation. Now, initially, guys, when I set this question, I actually had the calculation and then I changed it to give you the calculation and for you to comment on the calculation because I've had a few students struggling with this. Now, guys, it's important to note when you get a question like this, your approach isn't any different. And this can come up in any part of the management accounting syllabus. They can provide you with a calculation, a capital investment appraisal that the accountant has done. They can provide you with a WACC calculation that the accountant has done, a break-even calculation, an activity-based costing calculation. Any calculation they can provide you with. So it's not possible for me to cover, obviously, every single variation because this can come up in any part of the syllabus. So it's very important that you rather understand the logic behind how you deal with this. And guys, if you understand the theory that you've covered in the lecture, then you shouldn't struggle with a question like this because it's no different. All you need to do is think about how should I have done the calculation because I know the theory, I know how the calculation should be done because if you're happy, you all tell me you're happy with the calculation, but you're not happy discussing someone's calculation. That doesn't make any sense. If you're happy with the calculation, think about how you would have done the calculation, compare it to the calculation that you've been provided with, and then you'll easily be able to see the errors in the accountant's calculation. So just applying exactly the same theory, guys, it's no different. It's a bit more difficult because people always struggle with discussion compared to calculations. However, the theory is the same. The theory doesn't change. So practice one or two of these and you should be comfortable with them. All right, so you'll see what we're going to do. I'm going to think about how I would have performed the calculation correctly. I'm going to compare that to what the accountant did, and then I'm going to discuss. Now, it's very important that you read the required carefully because sometimes you just need to discuss the errors. So in other words, you need to say this was done wrong, this was done wrong, this was done wrong, this was done wrong. Sometimes you need to discuss the errors and you also need to state how those errors should be corrected. And that's what we're doing in this part of the required over here. We're going to discuss the error, and as soon as we've identified that it's an error, we are going to say how the error should be corrected. Now, if you jump to the suggested solution, you'll see I have actually included the correct calculation for you over here. But please note, you'll see I've said that the calculation has been included for study purposes only. If you perform the calculation, guys, you can't award yourselves any marks because you're not answering the required. The required did not ask you for the calculation. The required asked you to discuss the errors and how those errors should be corrected in the accountant's calculation. So this has been included here for study purposes only. If you did this, sorry, you don't get any marks because you're not answering the required. However, I do recommend that you have a look at this because it obviously shows you how the calculation should be performed correctly. And you'll see when I'm discussing this with you now, I will also refer to this because that helps us determine where the errors lie in the accountant's calculation. So let's go back to the accountant's calculation. Or first, let's actually quickly read through the information relating to the special order. Think about how the calculation should be performed. Look at what the accountant has done, and then we can pick up if there's any errors. So first we are told that the division received a request for a special order of 50 kilograms of a hazelnut flavored cappuccino. So we know that the order is for 50 kilograms. That's important because it will affect our costing calculations. And we know that the regular cappuccino is going to be infused with hazelnut flavoring using a specialized machine. So the starting point of the calculation has to be the cost of a regular cappuccino because obviously they're going to have to produce more of the regular cappuccino so that they can infuse it with this hazelnut flavoring in order to supply, in order to fulfill this special order. Sorry, I'm using my words here. So if we go up here, we know what it costs the company to produce the regular cappuccino. We have a standard cost over here per kilogram of 270 Rand. However, we need to analyze that cost in more detail. You can't just take that cost of 270 Rand per kilogram and say the full amount is relevant. It's not. The variable costs, the direct material, the direct labor, and the variable overheads, those costs will all be relevant. And again, think about it logically. Why will those costs be relevant? because it's a variable cost. So if the cappuccino division now has to produce more of the regular cappuccino so that they can supply 50 kilograms of this hazelnut flavored cappuccino for the special order, then all of these variable costs are going to increase as a direct result of the special order. So obviously that's relevant. The material costs are going to go up, the labor costs are going to go up, the variable overhead cost is going to go up. And all of these costs are going to increase as a direct result of the special order. So that's definitely relevant. However, here's the first mistake that our accountants has made. This fixed overhead over here should not be included in the calculation. Regardless of whether the cappuccino division accepts this special order or not, their fixed costs are not going to change. You haven't been told that their fixed costs are going to change. So if you're not told anything, you can't assume the fixed cost is going to change. What is the nature of a fixed cost? It doesn't change with a change in production volume. So even if they have to produce more of the regular cappuccino, the fixed cost isn't going to change. There's no relevant portion, so it should not be taken into account in the calculation of the minimum price. The only time that a fixed cost can be relevant is if you are specifically told that the fixed costs are going to increase as a direct result of the special order. Then that additional fixed cost, or the increase, the incremental portion, that will be relevant. However, if you are not given that information, the fixed costs are not relevant. So there's the first mistake. Because if we look at the accountant's calculation, you can see he's saying 270 Rand per kilogram multiplied by 50 kilograms. That's not correct, because that also includes the fixed costs, and that's not correct. So if we jump to the suggested solution, I'm going to look at the calculation first, but remember guys, you don't need to do the calculation. This is just for completeness sake. So with the calculation, you can see we have all of the variable costs associated to producing the regular cappuccino. So don't include the fixed overhead, just all of the variable costs multiplied by 50 Rand per kilogram. And you can see just below the fixed costs for the regular cappuccino. The cost is the same regardless of whether the order is accepted or not, so it is not relevant. It's not taken into account. So already here we see a difference between how we know the calculation should be performed and how the accountant has performed the calculation. All right, but you still haven't earned any marks. Okay, so you're going to do this in your head. You're going to look at his calculation and you go, that's wrong. He should not have included the fixed costs in the calculation over there. So let's answer the required. First, we need to say what the error is, and then we need to say how the error should be corrected. So what is the error? The accountant incorrectly included fixed overheads in the calculation of the minimum price. Remember guys, the whole logic behind calculating a minimum price for a special order is you only take relevant costs into account. Relevant incremental cash flows. Okay, so that should definitely not be taken into account when calculating the minimum price for a special order. How should this error be corrected? There is no indication that the fixed overheads will change as a result of the special order. In other words, the cost is the same regardless of whether the order is accepted or not. And therefore the fixed overheads should be excluded from the calculation as the cost is not relevant. See, if you know your theory, you know the theory. If you know the theory, you can do a calculation, or you can explain errors in a calculation. You can do both. You just need to know your theory. Let's go back. Let's continue. Okay, what else are we told? The cappuccino division purchased the machine for another order 6 months ago at a cost of 64,800 Rand. Okay, so it's important to note that this machine is not being purchased for this specific order. It was purchased in the past for another order. So they just happen to have the machine. The machine is depreciated over its useful life of 5 years. The machine can be sold today for 50,000 Rand. However, if the order is accepted, the machine can be sold for 45,000 after the order has been fulfilled. So, first think about how you know the calculation should be performed. First, guys, we know the fact that they purchased the machine in the past. This 64,800 Rand over here is definitely not relevant. It is a sunk cost. Okay, money spent in the past. It is not a future cash flow. It does not meet the definition of a relevant cost. So it cannot be taken into account in the calculation of the minimum price because it's a sunk cost. Then we have the depreciation on this machine. And the depreciation is over a period of 5 years. And we also know that this order is going to take 1 month to complete. So it's easy enough to calculate the depreciation, just as we see the accountant has calculated the depreciation over there, over a period of 5 years and allocating 1 month to this special order. Now, the problem with that, guys, is we know that depreciation is not a cash flow. So because depreciation is not a cash flow, it's not relevant, and it shouldn't be taken into account when calculating the minimum price. So that's an error that we have over there, obviously, in the accountant's calculation. So if we just jump to the suggested solution, firstly, I just want to go through what I have done with you. We said that the machine was purchased 6 months ago, so that is a sunk cost. It's not relevant. Don't take it into account. The depreciation on the machine is not a cash flow. It's not relevant. Don't take it into account. That's what you would have done if the required had asked you to perform the calculation. So what do we do for the discussion? What has he done wrong? He's incorrectly included depreciation on the specialized machine in the calculation of the minimum price. Depreciation is not a cash flow and should therefore be excluded from the calculation because it's not relevant. So remember, guys, you need to say what is the error, and then you need to say how the error should be corrected. If you don't answer both parts of the required, it's going to be very difficult to pass this part of the required because you're always going to lose out on that second mark over there. So make sure you discuss the error. What is the mistake? How can the mistake be corrected? Okay, depreciation should not be included in the calculation. We know that. All right. Now, let's look at this machine in more detail because he's got quite a funky calculation here with the machine. He's taking into account the purchase and sale of the machine. So first he's taking into account the fact that the machine cost 64,800 Rand. And we've already said that he should not be doing that because that cost is not relevant. It's a sunk cost. It's money that was already spent in the past. So there he's got another mistake, but we'll discuss everything together. Let's see, what should we have done? We know the rules. We know what we should be doing. We are told that the machine can be sold today for 50,000 Rand. However, if the order is accepted, the machine can be sold for 45,000 after the order has been fulfilled. Now, remember, guys, the only cash flows that are relevant over here are the cash flows that directly relate to this order. So if the company doesn't accept the order, they can sell this machine today and they can get 50,000 Rand for the machine. If they do accept the order, then obviously they can't sell the machine because they need to use it for the order. They can only sell it after the order, and then the value of the machine is dropped, so they can only get 45,000 Rand for the machine. So that drop in value of the machine as a direct result of this order is relevant. Okay, so the only relevant cash flow that we have over here is the decrease in value of 5,000 Rand because they are going to lose out on 5,000 Rand cash if they accept this special order, because then they can't sell the machine today. The machine is going to lose value and they'll be able to sell it at a lower price, and that is directly because of this special order. So if we jump to the calculation first again, you can see there the decrease in the value of the machine as a direct result of the order. It's in calculation 2. There's a drop of 5,000 Rand. That is the only relevant cash flow that should be taken into account. That's how we know the calculation should be performed. Let's see what he's done. Okay, so I already said to you here, that is the original cost of the machine 6 months ago, sunk cost, not relevant. Now what he's doing is he's offsetting that against the proceeds that the division will get on the sale of the machine after the order has been completed. So after the order has been fulfilled, they'll be able to sell the machine for 45,000. So he's got a net cost there of 19,800. Now, that is incorrect. Let me explain this to you guys. Let's look at it in this way. Let's look at a different variation because that's actually the best way to do it. If the company was purchasing the machine specifically for this order, then his calculation would be correct. Why? If the machine was being purchased specifically for this order, it would cost the company 64,800 Rand to buy the machine, and that would then be relevant because they're buying the machine specifically for this order. It's not for another order. It's not a sunk cost or a cash flow that happened in the past. They're buying the machine specifically for this order. So that would then be relevant. And the 45,000 Rand proceeds on sale of the machine after the order has been fulfilled would also be relevant because the net effect is that's what the machine cost the company, 19,800 Rand. That's the cost less the proceeds that they get when they finally sell That is the actual cash flow. That's what the actual cost is. And I'm not talking about income statement expenses, guys, because obviously the expense will be the profit or loss on sale, etc., etc. Remember, with relevant costing, we look at cash flow. So I'm looking at cash flows. This would have been a cash outflow when they purchased the machine. This is a cash inflow when they sell the machine. So the net effect is we have a cash outflow of 19,800. And like I said to you, the only time that this calculation can be correct is if the machine was specifically bought for this order, because then it's correct that this cost over here is allocated to this order, because the only reason why the company incurred that cost is because of this specific order. But we know that that's not the case in this question. This machine was not purchased for this order. This machine was purchased for another order in the past. So that can't be relevant because it's a sunk cost. This here also is not relevant because the machine was not specifically purchased for this order. The only thing that's relevant is the decrease in the market value of the machine as a direct consequence of accepting the special order. So the drop of 5,000 Rand as a direct consequence of accepting the order. So let's have a look at this discussion over here, because this was probably the most tricky part of all of the discussion. Okay, so first, what has he done incorrectly? What is the error in the calculation? He has incorrectly included cash flows relating to the purchase and sale of the specialized machine in the calculation of the minimum price. And that is wrong because the machine was not specifically purchased for this order. Firstly, the machine was purchased for another order 6 months ago. So the cost of 64,800 is a sunk cost and should be excluded from the calculation because it is not relevant. Okay, so let's just clean this up over here. We're discussing each component to the calculation separately. That cost over there should not be included in the calculation. It's a sunk cost, money spent in the past. It's not relevant. In addition to that, the machine was purchased for another order. So the proceeds on the sale of the machine, this 45,000 over here, is also not relevant and should be excluded from the calculation because it does not relate to this order. The only cash flow that relates to this order is the decrease in the value of the machine as a direct consequence of accepting the order. And that's what he should include in his calculation instead. That's how he will correct the error. He should include the decrease in the value of the machine as a direct consequence of accepting the order in the calculation of the minimum price. And we know that that is an amount of 5,000 Rand. All right, let's see what's left. There is just enough hazelnut flavoring in stock, which cost 1,500 Rand. Okay, so they have enough hazelnut flavoring in stock. They don't have to go and buy it. However, the 1,500 Rand we know can't be relevant because it's not a future cash flow. It's a sunk cost. It's money that's been spent in the past. And if we look at the accountant's calculation, he's actually done this correctly. The original cost is a sunk cost and is therefore not relevant. So that's perfect. There's no mistake in his calculation over there. So what is the relevant cost? You need to see. It depends on what you're told in the question. The hazelnut flavoring is going to expire soon, and if not used for this order, it's going to be disposed of at a cost of 400 Rand. So, if the order is not accepted, the company is going to have to dispose of this hazelnut flavoring, and it's going to cost them 400 Rand. If the order is accepted, they'll use the flavoring for this order, and they won't need to dispose of it. So this is a saving associated to the order, because if they accept the order, they will save this cost because they won't need to dispose of the hazelnut flavoring. And you can see that's why it's deducted over there in the calculation. We are trying to work out the minimum price or the minimum cost. So obviously if this is a saving, you need to deduct it from all of your costs over there. And then what he does last is he just divides by the 50 kilograms in order to get the minimum price per kilogram, because that's what he's calculating over there. All right, so that's how he's performed the calculation. There's no problems with the hazelnut flavoring. That has been performed correctly, so we don't need to include anything in our discussion over there. Let's just check if there's anything else. We know that the order will take 1 month to complete. Okay, that's just for the depreciation. And we know that the division has sufficient capacity. That's very important, because if they have sufficient capacity, we know there's not an opportunity cost. Remember, guys, if there is an opportunity cost, it needs to be included over here in the calculation of the minimum price. And the calculation is exactly the same as what we looked at in Part C of the required. Remember, your opportunity cost is your lost contribution. So what contribution are they losing out on as a direct consequence of the special order? Include that in your calculation over here. All right, so like I said, there's nothing further to discuss. We have discussed all of the errors and how all of the errors should be corrected. However, if we just look at the calculation, just for completeness sake, you can see for the hazelnut flavoring, we have the exact same calculation as the accountant because there were no errors over there. And I've just included the opportunity cost because if you did have to perform this calculation, remember, you should always just show it. We are specifically told that there is sufficient capacity, so there is no opportunity cost. All right. And then, guys, what's important to note over here is if the minimum price had been calculated correctly, we get to a price of 337 Rand per kilogram. As per the accountant's calculation, we get to a price of nearly double that, 679.60 per kilogram. Now, the problem with this is if the accountant makes errors like this, you're now going to go to the company and say, okay, we're going to charge you this for the special order, or this plus a markup, whatever it is. And if that company now goes to your competitors or to other companies and requests a quote from them, and if their accountant performs I'm assuming their accountant will hopefully perform the calculation correctly, then there's a chance that this company is going to lose out on the special order because of the errors made in this calculation over here, because they're going to go and quote their customer a much higher price than what they should be quoting the customer. So that's really important that these minimum prices over here are calculated correctly to make sure that the company obviously gets the order. We don't want a situation where you lose out on this order to the competition just because the accountant has made silly mistakes in the calculation. All right, so that's then everything, guys. That's the end of this question. Thank you very much.